In this video, we're going to be doing an analysis on Disney. If you like this type of content and you want to watch more of these videos, definitely consider subscribing and leaving a like. And let's look at what's going on right now. So, Disney has been getting people excited in the last 6 months. It has started to move higher. Earnings have beat the past couple times, and people are getting excited. Something I want to remind people about, though, is Disney inherently in the last 10 years has been a very weak stock. That could change, and we will get into that in just a bit. But we're going to look at exactly what's been really going on in the last 10 years. So you can see that if you bought Disney in 2014 and you sold in 2023, you would have been barely break even. If you had bought all the way back here and you sold here, you would have been break even while the stock market had, I think, if I can't remember exactly, but I think it probably like doubled or something since then. So you would have been killing it. Something I'm realizing as I've been recording these videos, I'm realizing I should probably explain myself a little bit more and what my take on the markets are and why I trade the way I do. So if you don't know, something I've said in prior videos that I'm going to start to say in every video now is essentially the market moves to take out old highs and old lows. It does this because it wants to make sure everyone is sufficiently wrecked before moving in the opposite direction. We're going to take a look at that really quickly, just very briefly, because if you've seen my other videos, I've talked about this a lot, right? Let's see. Runs through this high, runs through this low. Then it makes its move up. Runs through this high, runs through all these lows. Okay? Runs through these highs, and before it goes down, it has to run through this high, and then it runs through all the lows. And then it runs through all the highs. And then it runs through all the lows. Let's look over here. Runs through the highs, runs through the lows, runs through the highs. The market does this to purposely make everyone wrong before going where it wants to go. Okay, now that we got that out of the way, let's talk about what's going on. So it's been doing better and better. It's been beating earnings. You can see, however, recently we just took out this high, which is okay. Like, it's not like totally scary because, well, you need to take out this high, and this will come. This will pretty surely come, but in the short term, so I like to make my future draws on liquidity. That's what previous highs and lows are called. I like to make them blue, so that's where like the target is in the medium term, right? But you can see in the short term, price wants to run through old highs and run through old lows. So what does that mean? Well, it might have to just take out this low and this low first. I mean, it wants to make sure everyone's wrong. So it wants to make sure anyone that's bought from February through March wants to make sure they're wrong before it's going to go take out this $126 high. Okay, that's the short term. Medium term, let's go back to what we were talking about earlier, which is Disney's moved sideways for 10 years. And don't get me wrong, right? All of these highs, they're wanting to be taken out, right? They are. However, there's something that might be a little bit more scary, which is these three relatively equal lows. So I've talked about this in other videos, but very briefly, because I want to make sure I fully explain myself in every video that I make. When the market makes these relatively equal lows, it essentially is gonna come back when it makes relatively equal highs or relatively equal lows. It's a sign that the market is not done and it's still hungry. The market purposefully leaves these relatively equal lows and highs so that it comes back and wrecks everyone that thought they barely escaped and they were break even and they didn't lose money. But they did, but they will, because they're gonna make the market seeks to make everyone underwater before moving in the direction it wants to go, right? So if some people, if they didn't have the chance to make them panic, what institutions will do is they're waiting for people. The people, if they haven't made people panic yet, like these people that were buying here and here, obviously they were probably panicked, but they weren't underwater yet. If they weren't underwater yet, that's not really optimal for institutions. They want to make sure everyone's underwater so they can get as many people to sell them their shares. So if Disney is truly ready to take out all of these highs, what would really make sense to me is if it came down and took out all of these relatively equal lows. So if you see Disney come back down after it, let's start from the short term again, right? Takes out this low. Let's just get rid of it for a second. Takes out this low. We know that those are there. If we see Disney come and take out that low and that low, right? Let's just be hypothetical here, and let's say it comes right to the middle of this fair value gap, which I could do a whole video on fair value gaps, but I don't want to have to go through everything in just this video. If it comes back to this fair value gap, right, and comes back to the midpoint of this final move down. This is just hypothetical, right? This would be a support area. You can see Disney gets some support after taking out this low. Very possibly, or you don't, but we're just being hypothetical, right? Since this is a sweep of the high, let's make that red. Let's get rid of this gap now. Actually, let's just say takes out these lows, comes to this midpoint, and then it runs both of these highs. Since these are really kind of relatively equal, I mean they're not essentially equal, but on a monthly basis they're close to equal. The market would probably want to take out that final high, get everyone on board with, yes, Disney, they're making a comeback. And obviously it kind of depends on the macroeconomic conditions and if the market's going to uptrend or downtrend. But it comes back to this midpoint, pops up, runs both of those highs. What would get everyone to sell their Disney shares would be if it came back down and ran all of these equal lows. At which point, if it runs all of these equal lows and you're not, let's say you're just out of the market, right? And it runs all those relatively equal lows and it gets a reaction off of it, all these highs get run. That is 3x from here. So here's your buy, right? I mean, we could get some additional confluence on that, but it might go lower, right? But like, if it just barely runs these lows and then flies back up and takes out all these highs, wow, that would just be beautiful. But anyway, summary of what we just talked about. Possible run of this high, breaks down to this gap, another run of this high. These highs, yes, it might come up, take these out too, but it might get stuck. It just might. Let's say it does. Let's just say it does. But the market's lazy. It wants to go take out the closest high or low. You gotta call it that, right? So the market's lazy. And I don't think that the big players are going to be in until these lows all get ran. And when they, because the big players know that they don't want to be in if there's all these relatively equal lows below, right? So most likely outcome is it just runs this high because these are too far away. But let's say it runs all of these highs, right? Goes back down, and then, like I said, flies up and runs the $200 level. This is a 10-year, 5-year time horizon, obviously. But short term, let's say you're a short term Disney trader. I would like to see Disney come, rip through all these lows, get to this gap, get a reaction off this, and then come take out this high. Then if you're a medium term trader, maybe you want to short above this high, take down to these lows. Or you don't even need to do that. Maybe you just want to take it down to this low, if there's a hypothetical low here, right? But if you're a long-term investor, Disney below these relatively equal lows would be absolutely a beautiful opportunity. With that, I don't want to end the video quite yet, because I would like to add additional confluence into this fair value gap over here and why this would be a possible optimal entry point, or even lower than that fair value gap, because let's find the midpoint of this final move down, right? Oh, whoops. Yeah, so the midpoint, and I like to measure. So for those who know are new to my videos as well, I mean, I'm not sure I talked about this actually, but I like to take the midpoint of the final move down. Well, either one can work. You kind of just want to see where it reacts off of, but I like to do it sometimes from the candle body because that's a better measure of where the institutions are entering, and you can see that a lot of the time that ends up being more accurate. Let's just find an example of this real quick just so I can show you. Let's see here. Shouldn't be too hard to find. They're everywhere. They're absolutely everywhere. Right? Final move up, midpoint. When I got the strong reaction off this midpoint, what did you know? That it was coming for all these lows. Even this low. It barely took it out, but it did. It did take out that low. Is that enough to constitute it going all the way back up to the highs? Probably not. I think that smart money is going to want to see quite a bit more of a rip, like just like another leg below this low, so it's a clear sweep, right? But if you can get that clear sweep, then I think smart money would want to take it all the way back to the highs. So now that I just kind of got that out of the way real quick, and let me know in the comments if you think that I should be explaining everything in detail, or if you think that it's okay if I'm not fully talking about every single little terminology and thing that I do, just to help me know if I should be including more or less with the explaining, because I want to make everything as simple and easy to understand as possible. But let's say it does go to this final move down, right? It could even be going as low as to here, 94, right? Let's leave both of those out. And then once again, if you get a strong reaction off of 94, which also is the top of this little move down, right? Then that as well could be a buy for it to go all the way back up to the highs. Do I think it's possible that it wants to go up straight to these highs? Entirely. It's entirely possible. I just think that with these relative equal lows down here, that it will want to come take them out. So if you're an investor, just keep that in mind. It is something that it's just good to know about. But if you're a trader, any of these moves could be opportunities for you to trade. Just depending on how it reacts. If it gets a strong reaction off 100, cool, target that high. If it's a strong reaction off of 95, cool, target that high. And if it goes above here, and just totally hypothetical again, but like if it comes, let's say it comes back to equilibrium, and it gets a strong move off 140, target those lows. Anyway, let's clean this up a little bit. Okay. Final summary. So everyone in the back of the class can really just get the full thing. Okay. Took out this high. Where might it go? Well, it already reacted off of that. So, not sure it's going to go there. Already reacted off of that, so I'm not sure it's going to go there. So, all right. So, short-term target, this low, 105. Once it runs this 105 low, now the highs are fair game again. Once it runs through that 105 low, highs are fair game again, and it could react off 100 or that $95 level. And then at that point, to the highs, this is all hypothetical, totally hypothetical, but we'll make another video following up on this in a month. Let me keep that on there for a second. Okay, sweep of the highs down to the lows, come to the gap, possibly as low as 95. So that's a big range, but you want to see what it reacts off of. Then let's just draw it down at 95, just because that would be like probably the best one, the best entry. Let's find that midpoint again. Okay. Here you go. Okay. Swept this high. Down fills this entire gap, which would make sense because this is also a monthly gap. Down to either a $100 level, $95 level, or anywhere in that gap. Reacts off of it. Comes back to the highs. Possibly these highs. We don't know. This would be our target. Then, if it wants to keep going up, great. But then possibly these lows. But like I said, it doesn't have to. It's just more likely that the big money won't be in until these lows get ran. Okay. Hopefully you found this video informative, helpful, or you learned something new. With that, I'll see you in the next one.